So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to the Daily Call from Option Alpha. Hey everyone, welcome back to the Daily Call. This is Kirk here again from Option Alpha, and on today's Daily Call, we are going to talk about candlestick patterns, more specifically answering the question, can options traders use these for better entries and exits? So what are candlestick patterns? Well, look, they've been around for generations, decades, and it's basically just a way to visually or graphically represent price movement or price trend in particular markets. Now, these can be done on a daily basis, intraday, weekly, monthly basis. Where you often see them, obviously, is in a lot of stock charting software. And it's become, honestly, the standard, not, anything else in the investing space for the last, call it 2 decades or so. You see pretty much every stock chart has candlestick patterns. And the reason they call them candlestick patterns is because they look like candles in some cases. They have these wicks and they have these main bodies. And the idea is that, visually looking at these wicks and main bodies and how large or small they are in relation to prior days or recent days can give us some sort of indication of where the markets might go or where the markets might trend. Now, we've got a lot of content on candlestick patterns because I used them probably a lot more when I started out, and maybe I just relied on them a lot more when I started out. Right or wrong, I was very attracted to candlestick patterns early on because I learned about them in my time in New York, and I figured that, hey, look, if they, watch them and monitor them there, that I would, too. I've come to realize, though, that candlestick patterns, I think, do serve, a purpose for options traders, though they are not the rule, meaning that you don't have to use candlestick patterns. I do find that for myself, knowing a lot of candlestick patterns that are out there, especially looking at days where we have just huge movements in the underlying market or huge reversals, really, that those can maybe give me a little bit of indication of where the market either A, might be going or might not be going, right? So there's, patterns like morning stars and evening crosses and things like that. There's just all kinds of like funky names for patterns, falling windows, shooting stars, dark cloud covers, whatever you want to call it. But the reality is that I think it does give us a good, maybe visual, just kind of like secondary or third level clue as to maybe where things are going. So the way that I like to use them in particular is just to see like strength in the market. If you see a hammer pattern, which is the market opens up, it falls dramatically, but then it recovers that entire fall during the day and maybe closes near the open or above the open, that'll generate what's called generally like a hammer pattern or a hammer candlestick on the chart. And what that shows, just through its visual nature, is that the market fell for some reason, but was able or strong enough to recover all or, most of the fall that it had during the day. And you see the same thing on the other end where you see these what are called shooting stars, where the market opens, it rallies significantly higher, but then falls all the way back down to where it opened, basically gives up all of its gains. It couldn't hold on to it. Maybe that tells us, something about where the market is going, maybe at a point at which it's maybe weak or vulnerable and could be turning over. So do I think you need it to be successful trading? No, because we've built backtesting software that never looks at candlestick patterns, right? And so you can create a replicatable system just by entering positions and managing them properly, position sizing, etc. Our software never looked at candlesticks to say, okay, we're going to enter a position on this day or exit a position on this day based on a candlestick pattern. But again, when I'm looking at it, maybe it makes me think twice about, going long or short for that particular moment. Maybe I wait one day just to see what happens in the market. If I see a shooting star, maybe I wait a day if I'm going to go long or bullish on something, or maybe it might lead me to believe, okay, now might be a good time to get into a position that's bearish, right? So I think you have to use them in conjunction with other things is really what it comes down to. So I never use candlestick patterns by themselves. I never use technical analysis by itself. It always comes back down to that core option strategy, and then maybe some little stuff that, can help engage you and visually stimulate maybe where the market is going. So hopefully that helps out. I know it's a big question. Like I said, we've got a lot of content on candlestick patterns right here at Option Alpha, and maybe by the time that this actually goes out or very soon afterwards, we're going to be trying to put together a nice little course on candlestick patterns just to help people understand what they are and how to use them and how we look at them, which should be good. So as always, let me know if you guys have any questions, and until next time, happy trading. Thanks for joining us on the Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on the Daily Call from OptionAlpha.com.